Hello everyone, and welcome to the program. Let's dive right into today's market action. On Wall Street, the major indices were frozen over the weekend due to system snapshots, so the Nasdaq is showing a flat reading at 26690, the S&P 500 at 7757, and the Dow at 54036. But we don't need to rely on those static numbers. The ETF proxies tell a much clearer story. QQQ gained 0.84%, SPY added 0.55%, which points to a modestly higher tape for the broader market. The real fireworks were in the high beta names. ARKK surged 4.68%, MSTR jumped 3.29%, and Tesla climbed 2.53%. The money flow is unmistakable. It is rotating aggressively into innovative growth and AI-related themes, not a broad-based risk-on rally. Over in China, the A shares were also strong. The Shanghai Composite rose 1.02%, the Shenzhen Index gained 1.42%, and the Chinext board was up 1.35%. Growth clearly outperformed the large-cap weights. So today's character is clear. We are seeing a repair rally with structural divergence. Funds are concentrating in tech growth and innovation, not in defensives or safe havens. Let's look at the other asset classes. Gold pulled back 1.38% over the last 24 hours, falling from $44.01 to $43.40. That is mostly profit-taking after a strong 7-day run where it gained over 5%. The VIX is sitting at a low 14.90, down 6.82% over the week, which confirms that safe haven demand is cooling off. The 10-year Treasury yield is at 4.66%, drifting lower over the past 7 days, and that provides support for growth stock valuations. On the currency front, the dollar index is weak and consolidating around 99.60. The yuan is appreciating modestly, with USD CNH at 6.74, down 0.2% on the week. That combination is a direct tailwind for Asian risk assets. Now let's walk through the global session path. In Asia, the A shares were strong with a clear structure. The Shenzhen Index outperformed Shanghai, and the Chinext board rose 1.35%, showing offensive intent from growth investors. The yuan's appreciation raises the probability of foreign inflows. Then in the US session, tech stocks not only picked up the baton from Asia, they amplified it. Nvidia rose 2.07%, MSTR was up 3.29%, and ARKK surged 4.68%. The money is clearly spreading from AI hardware into crypto-related and broader innovative growth names. There was no divergence inflection point today. Asia set the tone, the US confirmed it, and the direction was consistent. However, our morning report had a couple of misses. We had listed gold as a hot sector, but it actually pulled back sharply in the short term. We also underestimated the pace of sector rotation. The strength in ARKK and MSTR shows that capital is moving beyond AI hardware into a wider innovation complex. Our radar also flagged unusual moves in names like Team, DOX, and TWLO, with some of them moving over 20%. That data is still pending verification, but the software space could be the next sector to take over. From an operational standpoint, US innovative growth and crypto-related assets are the strongest direction, with around 70% probability. But these names are volatile, and chasing them at current levels carries significant risk. A share tech growth is also constructive, with a 65% probability, supported by yuan appreciation. The weakest direction is gold, which should be treated as short-term soft, though the medium-term uptrend is not broken. On individual names, Team and TWLO could be considered on a pullback with small positions, no more than 5% allocation. For holdings, Sumitomo Electric and POET should be kept. For COHR, we suggest taking profits in tranches and reducing the position by half. On the avoid list, AKTS, VICR, and NOK should all be avoided firmly. Do not try to catch these falling knives. Looking ahead to Monday, the Shanghai Composite is likely to consolidate in the 3920 to 3980 range with a mild upward bias. U.S. tech growth should remain firm for the next 2 to 3 sessions. Gold is expected to consolidate around 43.40. The yuan should stay on the stronger side in the 6.73 to 6.76 range. And the VIX should stay below 15. If it breaks above 15.5, the risk appetite repair thesis is invalidated, and you should reduce exposure immediately. So let me wrap this up with a clear conclusion. Today's market is a risk appetite repair with internal divergence. Capital is not returning across the board, it is concentrating in high beta names tied to the AI industrial trend. As long as the 10-year yield does not break back above 4.75%, the tech growth direction has room to continue. But remember, this is not a broad bull market. Stay focused on the main theme, manage your position sizes, avoid chasing strength, and wait for pullbacks to confirm entry points.